Welcome to Real Estate in the Lowcountry. Our friend Benji Gecy has joined me today, and it's good to see you as always.
Glad to be back. It's been a while.
It has been a while. I think we missed a month in there because obviously you've been very busy. But as always, we want to jump in and talk about what's happening with the rates. They're a little, all over the place at the moment, but.
Yeah, so I'm glad I missed a couple of weeks because we had some bad news there. So as you can see from the Freddie Mac rate chart, published a 10-year rate chart, we hit the highest levels of 2023 about a week ago, almost the highest levels in 10 years, Betsy. So rates got up there pretty good, but good news is last 5 days, rates have rallied pretty good, and I'm still sticking to my forecast of rates closer to 5% by the end of the year. So real important right now, with rates this elevated, you got to shop your rate. That's how you're going to save money. There's a lot of dispersion with this lender, that lender, and lender across the street. Rates are different with every lender, so shop your rate. Another good tip, what we're seeing is a lot of insurance pressure right now. Shop your insurance rate. So you want to do that with an insurance broker as well. So two important tips right now with the elevated rates and elevated insurance rates is shop that rate. You save some money.
I know a lot of people have had major sticker shock opening their homeowners insurance lately. Maybe me included, but anyway, that's a story for another day. But talk to us a little bit about why there is such dispersion between the rates. I mean, obviously we know it's important to shop that rate, but what are some of those things that you're seeing that people can be aware of and what they're looking for?
Well, there's a lot of different elements that go into that. I mean, some banks may have a little more pressure with the current levels. Their volumes may be down. We've seen a lot of banks actually go out of business in the last year or so. Seen a lot of banks shut down their mortgage operations because of the low volume. So there's no real formula for why the rates are higher. It's just your job and your responsibility as a diligent consumer to shop it just like a car or anything else. So we do see a wide variety of rates, especially when rates peak, of lenders having rates all over the place. So I'm not sure why, but we try to offer the lowest rates as a mortgage broker, and we certainly are seeing, just like a month ago, we saw a builder with a mortgage company at 7.99, our rate was in the low sixes. So that's a big difference in the rate right there. And if that borrower had not shopped their rate, they probably would have gone with the 7.5%, 7.9%. So just shop it with a couple of lenders, and whatever you do the soft pull. You don't have to do a hard pull if they need to pull your credit bureau.
Which that's so important because you don't want all those different things if you're trying to get the best rate for yourself. Let's talk a little bit back, just go backwards a little bit about when you said some banks really actually have gone out of business. Why should buyers not freak out about that like we did back in 2008 when things were really bad?
Well, a bank is a little different than a wholesale mortgage broker. Some of the banks that I've seen go out of business are actually some of the wholesale lenders. So it's a highly competitive market. The wholesale channel, there's lots of lenders. Me as a mortgage broker, probably have 50 banks that I can go through. There's hundreds of them available. But when the market slows down and the volume is very low, they can't pay all the employees. They can't keep their operations open. So if they see that rates are going to continue to escalate and the rates are not going to come down to create another boom in the refinance or pick up in the purchase markets, most lenders are going to shut those operations down. And I think that's what we've seen over the last 6 to 12 months with some of those operations there. Strictly just volume is way down right now, 80-90% of where we were even before the pre-pandemic levels.
Gotcha. And so I was going to switch gears a little bit for this last minute or so. It was National Mortgage Brokers Day yesterday, so happy that to you.
Yeah, July 18th, National Mortgage Brokers Day, and we're celebrating 25 years as a true mortgage broker. Thank you. So it's been a real honor and privilege for us to serve families and thousands of families over the last 25 years in their pursuit of home ownership. So it's a great day, and I would not be anything else but a mortgage broker. So mortgage broker is definitely going to make it easier. It's going to make it hassle-free. And when you combine that speed and that service, that gives the buyer that 5-star experience that they deserve. And we try real hard to do that at Beaufort Lending.
Well, and you've been doing it well for 25 years, clearly. So how does somebody get to you if they want to talk to you about shopping at their rate?
Well, Beaufort.mortgage, you can always visit us there. And Google, you can visit us on Google. We got lots of 5-star reviews at Google, so real proud of those reviews there. But 1 mile east of Paris Island, so we've got our great digital footprint online, and we've got a great location that we've been in the same location for 25 years also, 1857 Ribaut Road in Beaufort.
Nice. Well, Benji, it's always great to see you, and thank you for keeping us up to date on everything mortgage rates. We appreciate it.
Great report.
Absolutely. Thanks so much.